Hi everyone, my name is Brett Wiederhold, and in today's video we're going to talk about buying real estate and the advantages that home buyers get when purchasing their first house. First, we're going to have a look at organizations that are in place that allow you to put as little as 5% down on a purchase of your first home. Second, if you've been in the workforce for a while and you've been contributing to an RSP consistently, you're able to take that money out of the RSP account and use that money as down payment for your first home. And finally, when you're buying a house, you have to pay a land transfer tax upon closing. However, when you're buying your first home, the Ontario government gives you a huge rebate that helps you out with the closing costs. And also on that note, Toronto has its own municipal land transfer tax, so you can also get a rebate on that when you're purchasing a first home as well. So before we examine each one of those in a little bit more detail, first, there's something you have to do before you even start looking at down payments. And what this is you have to get pre-qualified before you start looking at down payments and houses and land transfer taxes. So what pre-qualification is you go to your bank or your preferred lender and you talk to their mortgage specialist. Essentially, it's a meeting where they discuss your financial situation and the bank or the preferred lender will tell you how much money they want to give you or are able to give you. And what this does is it allows you to align your goals or your budget for a particular house along with what you can actually afford. So the huge question is, what would your mortgage payments be on a monthly basis? Are you able to afford that? Do you want to make those sacrifices in order to make those payments? These are all questions that we have to discuss before we even go house hunting. So once you do that, then we can start looking at all of the following information. So this first tip that I'm going to give everyone does not just have to be for first-time home buyers. So everyone out there that already owns a home, you can access this as well. And what I'm talking about is mortgage loan insurance. So what is mortgage loan insurance and why would you need it? So mortgage insurance is just like any other insurance where it protects yourself and it also protects the lender from default on your mortgage. And why do you need it? It's so that you can get a down payment as little as 5%. If I only had 5% on a $500,000 house, that's $25,000 for a down payment. That means the bank owns 95% of your household right now, or owes $475,000 on that house. And what we call that is a high ratio mortgage. So the bank is actually in a unsecure spot because you only have 5% invested into that household while they have 95% of it. So if you default on your mortgage, they're stuck. This is why typically banks like 20% down on their house so that it's an 80 to 20% ratio, not a 95 to 5% ratio. So when you purchase this insurance, this allows you to put less down, have a high ratio mortgage, and it protects both you and the lender. So CMHC allows you to put 5% down on the first $500,000 of your house, but for anything above $500,000, they require a 10% down payment for any monies over top of that. So if I was buying a $600,000 house, that first $500,000, 5% down is great. For that last $100,000, you would need an extra $10,000 down payment or 10% on that extra $100,000. So overall, a $35,000 down payment on a $600,000 house, not too bad. However, as amazing as that sounds, there is a catch. Just like everything, while this provides a fantastic opportunity to first-time and multiple-time home buyers to just put a 5% down payment, there is a premium cost associated with this. So what I found is it could add up to a 4.5% premium on top of your mortgage payments. So you take a look at the CMHC website, which I'll put in the description below, do your research, and see what fits your particular financial situation. This insurance premium can be paid in a lump sum right away if you have the cash for it, or it can be rolled right into your mortgage payments. So that helps out even more when you're a first-time home buyer. So CMHC, fantastic opportunity to put a low down payment on a first-time house. So we have CMHC, a federal organization that provides mortgage insurance. But there is another option if those numbers and those premiums aren't working for you. There's also Genworth. So Genworth also provides mortgage insurance for high ratio mortgages to help protect yourself and the lender. Again, I will put their website in the description below. please take a look at their website and see what works for you. So far, we've talked about organizations that will help you with putting a low down payment on your house. So let's say it's time to move out of your parents' basement, or you and your loved one want to go start a family and it's time to put down roots somewhere. You've been putting tons of work into saving up for a down payment, but now's the time to buy for yourself and you still don't have everything that you need in order to get settled in. There is another way that you can access some money put together by the government for your down payment on a house. Now, this tip is just for first-time home buyers, only available to people that are buying their house for the first time. What we're going to talk about here is the home buyers plan, where you can take RSP money and use up to $25,000 of your savings in an RSP to put as a down payment on your very first home. And if both you and your partner are first-time home buyers, you each can take $25,000 out of your RSP for a combined total of $50,000 to put down on your down payment. Now, as it's put together by the government, there are a couple rules. First, you have to be a Canadian citizen. Second, it also has to be your primary household, so you can't use this to buy a house that you're going to rent out and not live in. And finally, you have to make that withdrawal from your RRSP within 30 days of taking title of the property. Now, this sounds fantastic that you can take $25,000 to $50,000 out of your RRSP tax-free. However, it is considered a loan, so it has to be repaid. However, the repayment terms are not too bad. You can take up to 15 years to repay that $25,000 that you took out, and you don't have to start repaying until 2 years after your first withdrawal. So finally, we get to take a look at some rebates that first-time homebuyers get to access when buying their first property. Now, the first one, I would highly recommend that you talk to your accountant about it, as I'm not an expert in this area, but based on the research that I've done, the first one is just a tax rebate on your income taxes. So on your tax return, if you take a look at line 369, there's a home buyer's tax rebate, and you can claim up to $5,000 on qualifying homes. And finally, when you're buying your first home, upon closing, there are land transfer taxes applied to every single house sold in Ontario. When buying your first home, there is a rebate available, which is fantastic and helps with a lot of the closing costs. So let's take a look at a few of the numbers here. For the Ontario Land Transfer Tax Rebate, you can claim up to $4,000 on closing. Make sure you talk to your real estate lawyer about this. They will help you through the process with everything. At current land transfer tax rates, that $4,000 covers 100% of the land transfer for a house up to $375,000. So if you buy a house under $375,000, that rebate covers everything. Over that, you're responsible for the rest, but what a fantastic help for a first-time home buyer. And for those of you in the Toronto area, Toronto actually has a municipal land transfer tax, just like the Ontario. So you would have to pay both of the land transfer taxes if this was not your first time buying a house. However, the rebate for the Toronto one is $4,475. This covers all of the Toronto land transfer tax for a house up to $400,000. So keep those land transfer tax rebates in your back pocket if you're a first-time home buyer. So those are just a few quick tips on rebates and ways to save for down payments if you're a first-time home buyer. Like I said at the beginning, make sure that you talk to a bank or a financial institution and get pre-qualified for a mortgage. Once you understand your financial situation, have a look at CMHC or Genworth to help you out with gaining a high ratio mortgage. Second, where do you get that money, that 5% for a down payment? If you've been contributing to an RSP, you're able to take up to $25,000 out of that tax-free and pay those $25,000 off within 15 years. That's a great blanket. And finally, when buying your first house, there are huge closing costs related to land transfer tax. The Ontario and the Toronto governments have come up with rebates for first-time home buyers to help out with those closing costs. So talk to your real estate lawyer upon closing. So that's everything, everyone. Thank you so much for watching today. Let me know what you think of the video in the comments below. If you have any questions or need further clarification on anything, please contact me. Also, if you like these videos, please head over to my Facebook page, give it a like, the link is in the description below, and stay up to date with current trends in the Greater Toronto area. That's everything for today. I'll see you next time. Take care.